Good afternoon. Welcome to AS3 Cash Flow Statement question number 10. Today we are going to solve only questions. Enjoy. No theory. Keep the calculator ready. Battery charged. Okay, give me the answer fast. So, question number 10. Let us start. From the following details relating to accounts of AS Foundation Limited. Oh, again AS Foundation. Prepare cash flow statement. Share capital. Now just wait. It is written here 31st March 11. This is current year. And this is previous year. So when you will check the change, right to left you will have to check. Thakur is welcome. Share capital, look at the numbers from 3 lakh, it has become 4 lakh. So share capital issued 1 lakh. Share capital issued 1 lakh. Financing activity. Reserve was 80, now it is 1 lakh. 20,000 rupees transferred to reserve. Add in your adjustment. Profit and loss account was 30,000, now it is 50,000. So current year profit after all adjustment, current year profit after all adjustment 20,000. Debenture from 1,50,000, now it is 1 lakh. Now it is 1 lakh. So there is a redemption of debenture, 50,000 rupees redemption of debenture. Income tax provision, closing opening is given. This is IT, means income tax. Creditor, again proposed dividend. So for proposed dividend, if nothing is given, last year paid, this year made. Last year paid, this year provision made. Okay, last year paid, this year made. So last year paid will go to financing activity. This year provision made, add back in adjustment. Goodwill, like question number 9, goodwill 10,000 rupees written off. So add back in adjustment. Then you have plant and machinery. Debenture discount, again same. Opening is 8,000, closing is 5,000. Debenture discount written off 3,000, you have to add back in adjustment. Then this prepaid expense is a current asset item. Investment, debtor is a current asset item. Stock is a current asset item. And cash in bank. Seems like an easy question. Yes or no? It appears to be an easy question. Now let us see the adjustments given below. Adjustment number 1, 15% depreciation has been charged in the accounts on plant and machinery. But the student will have to calculate the depreciation amount. Okay. So suppose I ask you, guess the depreciation. Guess the depreciation amount. But let me read the second point also and third point also. They are all related to plant and machinery. Old machine costing 50,000, WDV 20,000 have been sold for rupees 35,000. So what is the profit or loss on sale? Who will answer me? What is the profit or loss on sale? Please reply little fast. Profit or loss on sale? Old machine costing rupees 50,000, WDV rupees 20,000 was sold for 35,000. My question is, what is the amount of profit or loss? Give me the answer. Profit or loss, and how much? Profit or loss, and how much? So Falak Mehta is saying 15,000 rupees. Falak, is it profit or loss? 15,000. Sanket is saying 15,000. Yes, Sanket, is it profit or loss? Govind is saying 5,000 rupees profit. Okay, so the answer is WDV is 20, sold for 35. So sale value minus WDV, 15,000 is profit. 15,000 is profit. You are right. A machine costing rupees 10,000. Don't look at the costing figure. I have to look at the WDV figure. Books of account contain WDV. In the books of account or in the balance sheet, the amount of plant and machinery is appearing at WDV. Okay. So WDV is 33,000, has been discarded. Discarded means written off. Written off means charged to P&L account. Charged to P&L account. So my question is, I will test your intelligence today. What is the depreciation this company must have charged? Guess the depreciation. Read the adjustment number 1, 2, 3 and guess the depreciation. Guess the depreciation. Time allowed 10 seconds only. What was the depreciation charged by this company for the current year? Please reply. Yes, Chetan, please reply. Okay, so you keep trying. I will read the next point. Rupees 10,000 profit was earned by sale of investment. Profit on sale of investment. The entry would be investment account debit to P&L account 10,000. 10,000. Investment account debit to P&L account 10,000. Tick mark investment account. We have to prepare investment account to find out exactly how much was the profit. Okay. On the asset side, tick mark plant and machinery, tick mark investment. They have some adjustment. Then debentures have been redeemed at 5% premium. Debentures have been redeemed at 5% premium. The entry for this will be debenture account debit 50,000, P&L account debit 2,500, to bank account 52,500. This will be the final effect. There are two ways premium can be adjusted. Premium can be adjusted in general reserve or premium can be adjusted in P&L account. These are the only two reserves appearing in the balance sheet. So in case if you want to ask me why we are not considering premium in securities premium account, so please check, there is no securities premium account in the balance sheet. So in the balance sheet we have only two reserves, either P&L account or general reserve. So we will assume premium has been charged to P&L account. We will assume that the premium has been charged to P&L account. Okay, no problem for such simple problems. Next is rupees 45,000 income tax has been paid and adjusted against income tax provision account. The entry for this will be, in previous question also we had the same thing. Please come every day, provision for tax account debit to bank account. Tick mark income tax provision account. Liability side, last third item, tick mark income tax provision. Tick mark income tax provision 45. We will find out the balancing figure. Interest on debenture during the year amounted to 15,000. Interest on debenture they have charged to P&L account. So the adjustment will be, you add in operating activity and you deduct this in financing activity. Add in operating activity, deduct in financing activity. So these are the only 7 adjustments. How many adjustment? Only 7. Now question is not clear whether we need to follow direct method or whether we need to follow indirect method. So you will please help me. Should we follow direct method or should we follow indirect method? Can this question be solved under direct method? The answer is no. This question cannot be solved under direct method. Then you will ask why. For direct method, I need to find out collection from debtor. Collection from debtor. I need to find out payment to creditor. To know the collection from debtor, I need to know sales figure also. Opening debtor, closing debtors are given, but sales figure is not given. So you will not be able to calculate collection from debtor. Similarly, you will not be able to calculate the payment to the supplier because purchase figure is not available. This question can be solved. Because of the data, this question can be solved only under indirect method. This question can be solved only under indirect method. Okay. So first what I'll do, first I will draw the format. Everybody take out your notebook, pen, pencil, scale and start. One question is still not answered. What is the depreciation for the year? Somebody has given answer 44,700. We will check later whether this is right or not. Depreciation. We will check. Others can try and you can give me the answer in between. Format, write down. Name of the company at the top. AS Foundation Limited. AS Foundation Limited. Cash flow statement. Cash flow statement. Indirect method. Cash flow statement, indirect method. Cash flow statement, indirect method. Then write down for the year ended 31st March 2011. Please write down. Very good question. Similar questions are asked in the exam. Similar questions are asked in the exam. For the year ended 31st March 11, you have written. Now draw this format. Serial number, particulars, rupees, rupees. Serial number, particulars, rupees and rupees. Serial number A, cash flow from operating activities. Avoid shortcut. Don't write CFOA. Somebody writes CFFOA. In the exam, institute will enjoy more cash flow. Student will enjoy more cash outflow if you write shortcut. Okay. Your cash flow statement will show negative cash flow from operating activity. If you use shortcut, an institute cash flow statement will show positive cash flow from operating activity. So don't do that. First point 1, net profit before adjustment. Net profit before adjustment. One line blank. Point number two, adjustments. Point number two, adjustments. After adjustments, here keep 14 lines blank, minimum. 14 lines blank. There are many adjustments. Point number three, write down operating profit before working capital changes. Operating profit before working capital changes. Point number four, write down operating profit before working capital changes. Operating profit before working capital changes. Then point number four, write working capital changes. Working capital changes. Working capital changes. After that, keep around 6 lines blank. 6 lines blank. Then write down point 5. Point 5, write down cash generated from operations. One line blank. Point number 6, income tax paid. Income tax paid, one line blank. Then write down net cash flow from operating activity. Net cash flow from operating activities. Net cash flow from operating activities. Net cash flow from operating activity. After that, write down point number B. Point number B, write down cash flow from investing activities. Cash flow from investing activities. Keep 5 lines blank at least. Cash flow from financing activities, 6 lines blank. 6 lines blank. Point number D, write down net increase or decrease in. Net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. Point number E, cash and cash equivalent at the beginning of the year. Point number E, cash and cash equivalent at the beginning of the year. Then write down last line, cash and cash equivalent. Cash and cash equivalent at the end of the period. Cash and cash equivalent at the end of the period. Is the format ready? Once you confirm format is ready, then we'll prepare working notes. Okay, we'll prepare working notes also. So format is ready, all of you. So write down below working note 1. Working note 1, write down income tax provision account. There is one adjustment in income tax provision. 5 lines blank. After the format, then working note 2 write down plant and machinery account. It has lot of adjustments. This has more adjustment, so more space. 10 lines blank. 10 lines blank. 10 lines blank. Then working note 3, investment account. There is some sale of investment also. Keep 6 lines blank. More space if you keep blank, you can write nicely. Okay, everybody, we are solving right now question number 10. So keep question number 10 in front of you. Keep question number 10 in front of you. So can we start now, everybody? Is the format ready? Is the format ready, everybody? Can we start now? Question is, can we start now? Can we start now? Everybody first confirm. Then we can start together. So the student is saying we can start now. Okay. So here we are starting from the following details relating to accounts of AS Foundation. Okay, so start. Chetan is saying start. Start with liability side, share capital. Opening balance of share capital was 3 lakh. Read from right to left. 3 lakh became 4 lakh. So issue of share, financing activity, point number 1, issue of shares. Issue of shares in the first column, 1 lakh. Reserve, from 80 it has become 1 lakh. So you will write in adjustment, point number 2, transfer to reserve. Add transfer to reserve. Add transfer to reserve. First column 20,000. Then P&L account, first line, net profit before adjustment. Net profit before adjustment, closing balance is 50,000 minus opening balance 30,000. So the profit before adjustment is 20,000. Debenture were redeemed. It's written somewhere below in point number 5. Debentures were redeemed at 5% premium. So you will write journal entry for redemption of debenture. Journal entry for redemption of debenture would be journal entry for redemption of debenture. Those who want to write can write. This is not compulsory. 50,000 rupees debenture got reduced. P&L account debit. P&L account debit will be 2,500. That is 50,000 into 5% premium, and to bank account will be 52,500. This is the net effect of this redemption. Okay. Debenture 50,000 got reduced. This is already in the balance sheet. So that effect is over. P&L account got a debit. P&L account must have got a debit of 2,500. But it is a financing activity, so I have to add back in operating activity, and I have to pay or write in financing activities. So please come to adjustments. In adjustment, you will write add premium on redemption of debentures. Add premium on redemption of debenture, 2,500 rupees. Premium on redemption of debenture, 2,500 rupees. 5% of 50,000. And then we'll go to financing activity. In financing activity, write down point number 2. Point number 2, write down redemption of debentures, including premium. Redemption of debenture including premium, in bracket write 50 to 500. 50,000 and 5% premium, 50 to 500. Next line in the question is income tax provision. Fifth line in the liability side is income tax provision. So you write first by balance brought down. By balance brought down is 50,000 and to balance carried down. To balance carried down is 40,000. Just keep it here. We will come back to this after some time. Trade creditor. Trade creditor is a working capital adjustment item. Trade creditor was 90,000 and from 90,000 it has become 70,000. So in point number 4, operating activity point 4, you will write down decrease in creditor. Decrease in creditors. Tell me, decrease in creditor, decrease in cash flow or increase in cash flow? Decrease in creditor 20,000. Is it decrease in cash flow or increase in cash flow? Come on, fast. So this is decrease in current liability, decrease in cash flow. Last line of the liability side, proposed dividend. Last year paid, this year fresh provision made. So please come to financing activity. In financing activity, point number 3, write down proposed dividend. Proposed dividend for year ended 31st March 10 paid. Last year paid. Last year paid. And this year provision for proposed dividend was made. Entry is P&L account debit to proposed dividend. P&L account debit, add back, because proposed dividend is to be shown in financing activity. So come to point number A, adjustment. In adjustment you will show proposed dividend for year ended 31st March 11. This is not a cash flow, this is just a provision debited to P&L account. So you will add back. Chaurasia is right. Jan is right. Okay. Then come to asset side. First item is goodwill. Goodwill was 1 lakh, now it is 90,000. So goodwill written off in P&L account, non-cash item, add back. Goodwill written off in P&L account. Goodwill written off, add back. Why? non-cash item, non-cash item. And how much is the amount? The amount is 10,000. The amount is 10,000. 1 lakh minus 90,000. If you have space, write down 1 lakh minus 90,000. So we are solving question number 10. Keep the notes in front of you to understand. Now the next is plant and machinery. So here I will go to a working note 2. Working note 2. To balance brought down 2,98,000. And credit side last line, by balance carried down 429 250. 429 250. I will come back to this account after some time. Third item on asset side, debenture discount. Debenture discount from 8,000 it has become 5,000. What they have done? They have written off debenture. What entry they have passed for writing of debenture discount? P&L account debit to debenture discount written off. P&L account debited for a non-cash item, add back. So again come to adjustment. Point number A, adjustment, operating activity adjustment, add discount on debenture written off. Why we are adding back? Non-cash item. Non-cash item. Amount 3,000. 8,000 minus 5,000. Prepaid expense. Prepaid expense is a working capital, current asset item. So come to point number 4. Look at prepaid expense. It is increase in prepaid expense. Increase in prepaid expense. The amount is 1750. Now tell me, increase in current asset. Increase in current asset, is it increase in cash flow or decrease in cash flow? Come on, reply fast. Increase in current asset is a decrease in cash flow. Very good. Increase in current asset, decrease in cash flow. Next point is what? Investment. Fifth item is investment, working note 3. Working note 3, debit side, opening balance. To balance brought down is 1 lakh. 1 lakh is opening balance, and buy balance carried down. Buy balance carried down is 60,000. Buy balance carried down 60,000. So up to this any query? Then sundry debtor is again current asset item. So come to operating activity. Operating activity point number 4. Operating activity point number 4. Decrease in sundry debtors. Decrease in debtors. Please reply. Decrease in debtor 50,000. Is it cash increase or cash decrease? Reply fast. Decrease in debtor. Positive cash flow or negative cash flow? Positive or negative? So decrease in current asset, increase in cash flow, positive. So keep it as it is, positive. In the same place, write down one more line, increase in stock. Stock is closing 80,000, opening is 50,000. So tell me quickly, increase in stock is increase in cash flow or decrease in cash flow? Increase in stock is increase in cash flow or decrease in cash flow? So the answer is increase in current asset is decrease in cash flow. Most of you are right. Okay, most of you are right. Enjoy. Next item, cash and bank. Point number E. Last second point. Cash and cash equivalent at the beginning of the period. Outer column 10,000. At the end of the period. Outer column 20,000. Outer column 20,000. Very good. Chaurasia is right. Now come to working note number 2. Plant and machinery account. 15% depreciation has been charged in the accounts on plant and machinery. So they have not mentioned about date of sale of machine. They have not mentioned about date of purchase of the machine. So how do I compute the depreciation? So look at this figure. This figure 429 250. This figure 429 250 is after charging depreciation of 15%. If asset value is 100 rupees, depreciation is 15. So after charging depreciation, the value of the asset will be 85, which means this amount 429 250 reflects 85% of the value of asset before depreciation. Can I say that 429 250 is 85% of the asset value before depreciation? So therefore what I'll do, I will write here by depreciation reverse working 429 250, this you divide by 85% and then multiply by 15%. So this will give you depreciation 75,750. 75,750. What I will do now, this depreciation is a non-cash item. It is charged to P&L account. We will add back in adjustment. So in adjustment, write down add depreciation. Add depreciation, working note 2. Why we are adding it back? It's a non-cash item. How much is the amount? 75,750. 75,750. So this completes my adjustment of depreciation. Point number 2. In your question book, adjustment number 2, old machine costing 50,000, WDV 20,000 was sold for 35,000. So I am going to pass two entries. First, I will write here by bank. Bank account debit to plant and machinery 35,000. And on the debit side, to profit on sale 35,000 minus 20,000. 35,000 minus 20,000 is 15,000. As I have told you, this depreciation figures can be different depending on the assumption. Okay, so don't worry. We will assume that all purchases and all sales were made on the first day of the year. If you assume all purchase and all sales were made on the last day of the year, then you can take opening balance. Okay, so either of the two assumptions are okay. So come to buy bank 35,000. and to profit on sale 15,000. So this I will have to reflect in cash flow statement also. So please come to cash flow statement, investing activity. Under that write down 1, sale of machine. Sale of machine in the first column 35,000. Sale of machine 35,000. And then you write down in adjustment less. Less write down profit on sale of machine. In bracket non-cash item. Why we are adjusting non-cash item? And how much was the amount involved here? The amount was 15,000. Amount was 15,000. If you have space, write working note number 2. If you have space, write working note number 2. Depreciation can have two answers. One, if you assume all purchases and sales are made at the beginning, then what we have written is right. If you assume all purchase and sales are made at the end, then just calculate on the opening balance. Anyway, so let us continue and go to the next item. Rupees 10,000 profit has been earned. Sorry, before that, a machine costing 10,000, WDV 3,000 has been discarded. Discarded means it was written off without sale. Discarded means written off without sale. Okay, so you can write if you want. Discarded means written off without sale. So the entry will be P&L account debit 3,000 to plant and machinery account 3,000. So what I'll do, first I'll go to plant and machinery credit side by P&L account 3,000. Machinery discarded. Machinery discarded. And it is a non-cash item. It is a non-cash item. So I am going to add back in adjustment, add back machinery discarded and written off 3,000. Machinery discarded and written off 3,000. We will take the WDV, not the cost. Now come back to that machinery account. All adjustment relating to machinery are over. So please check whether this machinery account is tallying or not. If it is not tallying, there is some difference on the debit side. So that difference you write to bank. Anybody who wants to reply, and that is the purchase value. Please let me know what is the purchase value of the machine. Find out the balancing figure on debit side. Please try credit side total first minus debit side. So credit side total is 543,000 and minus debit side 2,98,000 and 15,000. So you are getting 2,30,000. 2,30,000. Tanya is right. So we will come to point number B. Cash flow from investing activity. Under cash flow from investing activity, second point right. Purchase of machinery. Working note 2. Amount in bracket. Everybody should reply. Come on. 2,30,000. Is this right? Everyone. Okay. Now next point is Bansode is right. Next point is rupees 10,000 profit has been earned by sale of investment. Working note 3 on the screen. Working note 3, profit on sale of investment entry will be investment account debit to profit on sale of investment. Investment account debit to profit on sale of investment 10,000. You can just write P&L account also. And credit side, the missing figure is sale value. So please tell me by bank balancing figure, sale value. By balancing figure, sale value. So this comes to 1,10,000 here. So 50,000. 50,000 is the balancing figure. 50,000 is sale of investment. So what we will do now? 50,000 sale of investment. We will write in investing activity, and 10,000 rupees profit on sale of investment, which is credited to P&L account. We will deduct it in adjustments. First effect in investing activity, where you will write sale of investment, working note 3, amount is 50,000, and profit on sale of investment is a non-cash item which you have credited to P&L account, less. So adjustment, write down less profit on sale of investment, that is in bracket, write down how much was that? 10,000, in bracket 10,000, in bracket profit on sale of investment, in bracket 10,000. The reason is non-cash item. Okay, one more line is pending. Point number 5, debenture have been redeemed at 5% premium. This we have done. Point number 6, 45,000 income tax has been paid and adjusted against income tax provision account. So there is an income tax provision account. Working note 1, debit side, to bank, write down 45,000. To bank 45,000, this is given, and then balancing figure on the credit side is by P&L account. So tell me the balancing figure. Debit side total 85,000 minus 50,000. So balancing figure is provision for the current year 35,000. Check the answer so far. So what I am going to do, this 35,000 is provision for income tax current year, add back in adjustment, and this 45,000 is actual tax paid. So that we are going to show in operating activity as actual tax paid. Both items will go to operating activity only. So first you come to adjustment. In adjustment you write down add, write down provision for taxation, add provision for taxation. I don't have much space, but I hope you are understanding. Provision for taxation, add back 35,000, and below point number 6, less tax paid, actual tax paid, in bracket in first column 45,000. 45,000. So this completes my adjustment number 6 also. Last adjustment, interest on debenture during the year amounted to 15,000. What we will do, interest on debenture is charged to P&L account. So it will be added back in adjustment, add back in adjustment and deduct it in financing activity. It's a financing activity item. So come to adjustment again. If you have space, write down below or you can write above, add interest on debenture. Add interest on debentures. The amount is 15,000 in adjustment. Next time keep more space, and the next effect will be in financing activity. In financing activity, interest on debentures paid, in bracket write 15,000, it is an outflow. 15,000 interest on debenture paid. Okay, everybody, now take your calculator. First, I will just check whether all working notes are closed. This is closed, closed, closed. Yes, so we are now ready to complete the answer. Dear student, first you will have to take the total from net profit till the last item here, 35,000 or 15,000, whatever you have written. So you will tell me what is operating profit before working capital changes. You will tell me what is operating profit before working capital changes. Please reply, operating profit before working capital changes. You add these items. Operating profit before working capital changes. Operating profit before working capital changes, you add from the starting till this point. So that comes to 199,250. Right here 199,250 in the inner column only. Where will you write? In front of this, operating profit before working capital changes. 199,250 minus 20,000 minus 1750 plus 50,000 minus 30,000. Now you will get cash generated from operation. Cash generated from operation. Cash generated from operation. You add these items. 197,500 in the same inner column. 197,500 minus income tax paid 45,000. So that will give you cash flow from operating activity 1,52,500. 152,500. 152,500. Check the answer. Cash flow from operating activity is 152,500. Say yes. After that, investing activity, is simple. There are only three items. So what is your cash flow from operating activity? Investing activity, negative 1,45,000. Negative 1,45,000. Tanya is right. Come on, everybody. Financing activity. Financing activity, positive 2500. Positive 2500. Investing is negative, which means they are investing more money in new business, new machines. And now please tell me, what is the net decrease or increase in cash and cash equivalent? Net increase or decrease in cash and cash equivalent. Moonrise is right. Net increase or decrease. Come on. Net increase or decrease. Add A plus B plus C. 10,000 increase, positive. Check whether it is tallying or not. Check if it is tallying. Yes, this is tallying. Chetan is right. 10,000 Sanket is right. Now, the time has come to close the answer by writing a note. Note, write down. First note is, it is assumed that purchase and sale of plant and machinery took place at the beginning of the year. At the beginning of the year. Purchase and sale of plant and machinery took place at the beginning of the year. Second, it is assumed that proposed dividend of last year has been fully paid. Has been fully paid. Proposed dividend of last year has been fully paid. And third, it is assumed that premium premium on debenture premium on debenture redemption has been charged to profit and loss account. Has been charged to profit and loss account. Premium on redemption of debenture has been charged to P&L account. One can also assume it is charged to reserve account. In that case, we have to open one reserve account. One working note will increase. So I will not do that. Already we have less time in the exam. So whatever simplifies my efforts, I will do that. So my dear students, any query on this question? Any query on this wonderful question number 10? This is a good assumption. This can change your answer. Other than this, if you have any query, please tell me. Any query on question number 10? If no, please come to question number 11. Okay. Question number 11. Again, one interesting question. All of you, please come to question number 11. Just below that, it says the following are the summaries of the balance sheet of AS Foundation Limited on 31st March and 31st March 10 and 11. This is 31st March 10 and this is 11. So this is previous year and this is current year. So while calculating the change, left to right you have to check. Left to right. So start. Creditor, bills payable, bank overdraft, provision for taxation, reserve, P&L account, share capital. So they have given in a reverse order. Given in a reverse order. Cash, debtor, advance, stock, land and building, plant and machinery, goodwill. Is it right? Any query on this balance sheet? And now next is during the year ended 31st March 11. During the year ended 31st March 11, interim dividend of rupees 26,000 and tax thereon at the rate of 10% was paid. And tax thereon at the rate of 10% was paid. This reminds you of question number 9. Please write down the journal entries somewhere nearby or in your notebook for this. 2 entries this company has passed. 2 entries have been passed by this company for interim dividend. And the entries are P&L account debit. Those who are interested student will write down. Later on you will not have confusion. To interim dividend payable account 26,000, to tax on interim dividend 10% of 26,000, 2600. So P&L account debit will be 28,600, and then they have paid this dividend. They have paid this dividend. So the next entry number 2 here would be interim dividend payable account debit 26,000, tax on interim dividend debit 2,600, and to bank whatever 28,600. So what we are supposed to do when we are preparing the cash flow statement, this P&L account has been debited, reduced, okay, because of this item, but this is actually a financing item. This is actually a financing item. Like question number 9, like question number 9, you will add in adjustment and this item you deduct in financing activity. This item you deduct in financing activity. Okay. So this is the treatment. Question number 9, we had done the same thing. So this is a repetition of adjustment. This is a new adjustment. Mark important. Tack, 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 tack. Adjustment important. This you have not done before this. The assets of another company were purchased for rupees 60,000. So this company, AS Foundation, has acquired another company for 60,000 rupees payable in fully paid shares of the company. Payable in fully paid. So assets were acquired not by paying in cash but by issuing the shares. These assets consist of stock 21,640, machinery 18,360, and goodwill 20,000. So please tell me the total of these 3 items. Take your calculator. What is the value of assets acquired? What is the value of asset acquired? 21,640 plus 18,360 and plus goodwill 20,000, so it is 60,000. So what is the journal entry they have passed? Again, some good student will write journal entry on acquisition of another company. In this question, the entry will be, Tanya is right, stock account debit 21,640. Jan is right. Everybody should reply. Machinery account debit 18,360. Goodwill account debit 20,000. And to equity share capital. To equity share capital 60,000. This will not be reflected in cash flow statement. Oh my God. Why? Why this item, this entry will not be reflected in cash flow statement? This entry will not be reflected in cash flow statement because there is no cash inflow or outflow. However, this will affect our calculation of net increase or decrease. So what you do, come to balance sheet. In balance sheet, you tick mark share capital. This share capital 60,000 rupees increase. This time is not due to issue of share against cash, but by issue of share against asset, so it will not come. Tick mark plant and machinery. Tick mark goodwill, tick mark stock. This goodwill is acquired by issue of share, not by cash. So this will not be reflected in cash flow statement. Share capital will not be reflected in cash flow statement, and stock and plant will have to make working note to calculate the change. On the screen once again, good student will continuously pay attention. There is one more adjustment. In addition, sundry purchase of plant were made. This is a cash transaction. Sundry purchase of plant were made 5650. The entry would be, write down somewhere nearby, plant account debit to bank. This is a separate entry. This is a separate purchase entry of plant from the market. Plant account debit to bank account 5650. Same adjustment one more time. Hat trick of adjustment, income tax paid. Tick mark your liability side provision for taxation. Liability side tick mark provision for taxation. This also tick mark. There is some income tax paid. You, who? You means this is a student. Student is required to prepare cash flow statement. Student is required to prepare cash flow statement for the year 2010-11. Yes or no? You written means student, so you will prepare. Write down the heading first. Write down the heading first. AS Foundation Limited. AS Foundation Limited. Then under that write down cash flow statement. Cash flow statement indirect method. Cash flow statement indirect method. Cash flow statement indirect method. right hand side two columns, rupees and rupees. First point number A, cash flow from operating activities, cash flow from operating activities, cash flow from operating activities. Under that one, net profit before adjustment, net profit before adjustment, one line blank. Point number two, adjustment. Point number two, adjustment. Then keep around 10 lines blank here. After adjustments, keep 10 lines blank. Point number three, operating profit. Operating profit before working capital changes. Operating profit before working capital changes. Operating profit before working capital changes. Point number four, working capital changes. Point number four, working capital changes. Then point number four, working capital changes, keep around 7 lines blank. There are many items, stock, debtor, prepaid expense, etc. Point number five, cash generated from operation. Point number five is cash generated from operation. Point number six, write down income tax paid. Point number six, write down income tax paid. One line blank. Point number seven. Point number seven, net cash flow from operating activities. Net cash flow from operating activities. Net cash flow from operating activities. This is only operating activity presentation. This question also cannot be solved under direct method. Then write down point number B, cash flow from investing activities. Cash flow from investing activities, keep 4 lines blank. Keep 4 lines blank. Cash flow from investing activities. Cash flow from financing activities. Cash flow from financing activities. Keep 5 lines blank. Cash flow from financing activities, 5 lines blank. Then write down quickly, everybody, point number D, net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. One line blank. Point E, cash and cash equivalent at the beginning. So we have started question number 11. Keep the question in front of you. Point number F. Point number F, cash and cash equivalent at the end. Cash and cash equivalent at the end. So slowly and slowly we will complete this wonderful chapter. We will take many questions for your practice. After that, we need to prepare some working notes. So dear students, after the format is over, you write working note 1, Working note 1, write down provision for taxation account. Working note 1, provision for taxation account. About 7 lines, 6 lines blank. Working note 2, plant and machinery account. Working note 2, plant and machinery account. Working note 2, plant and machinery account. Working note 3 would be calculation of change in stock, because there is an adjustment in the stock, but we don't prepare stock account, so we'll calculate the change by preparing a statement. Working note 4, write down, this is for understanding, journal entry on acquisition of assets of another company. Journal entry on acquisition of assets of another company. Keep the format ready. These are the 4 working notes we will pass, prepare, and I think that will be sufficient. If at any stage you have a query related to question number 11, query related to question number 11 can be asked. So here we are ready to solve this wonderful question now. Is everybody ready? Can we start? Tell me, can we start quickly? We can start. You are such a wonderful student. So the question has, on the liability side, sundry creditor. Sundry creditor is a working capital adjustment item. So come to operating activities. Point number 4. You will say increase in creditor. Increase in creditor, take your calculator, 41,135 minus 39,500. So it should be 1635. 1635. So please reply now. Increase in creditor is increase in cash flow or decrease in cash flow? Increase in creditor is increase in cash flow. So let it remain positive number. Similarly, next item, bills payable. Bills payable, write down decrease in bills payable. Decrease in bills payable. Please reply. Take your calculator, 33,780 minus 11,525 minus 11,525. So that is 22,255. 22,255. Now tell me, decrease in bills payable. Is it decrease in cash flow or increase in cash flow? Decrease in bills payable, decrease in current liability, decrease in cash flow. In case of current liability, decrease in current liability, decrease in cash flow. Next item, bank overdraft. You see, bank overdraft opening balance is 59,510 and closing balance is 0, which means bank overdraft has been paid. Bank overdraft has been paid. So you will write in financing activity, In financing activity, write down bank overdraft repaid. Cash flow statement is an evergreen chapter applicable for all the years to come. So where are we? Bank overdraft repaid 59,510. Now whenever the question gives you bank overdraft and nothing is given, take it as a financing activity. Your query can be, can bank overdraft be taken as cash equivalent? The answer is yes, if bank overdraft is an integral part of the cash management. But if the problem is silent, on our own, we will not assume that bank overdraft is an integral part of their day-to-day cash management, and we are going to take it in financing activity. Okay. So after bank overdraft, there is a working note number 1, provision for taxation. In provision for taxation, write by balance brought down. This opening balance 40,000 and two balance carried down. How much is that? Two balance carried down is 50,000. I will come back to this. Very important chapter we are doing. At least one question you will get for 8 to 16 marks. So don't miss it. Reserve. Next item is reserve. What happened to reserve? Nothing happened. From 50,000, it is still 50,000. Enjoy. No change in reserve. Dance at your home. Okay. And next line is P&L account. P&L account, write in point number 1. Net profit before adjustment 41 to 20 and minus 39 690. So how much is that? This will be something like 1530. 1530. 1530. Very good. Okay. Any query on this question? Our next line is share capital. Our next line is share capital, but remember the share capital 2 lakh to 2 lakh 60,000 is not due to issue of share against cash. It is due to issue of shares against asset acquired. So this will not come in cash flow statement. This will come in working note 4 first. So please come to working note 4. Working note 4 and also read adjustment number 2 in your book. Adjustment number 2 in your book is the assets of another company were purchased for 60,000 payable in shares of the company. Asset consists of stock, machinery and goodwill. So all of you, please come to working note 4, write down the entry. Write down the entry. Stock account debit. Stock account debit 21,640. Machinery account debit 18,360. Goodwill account debit. These figures are appearing in adjustment number 2, 20,000. To equity share capital 60,000. To equity share capital 60,000. Being assets acquired. Being assets acquired. So now you can see the entire 60,000 rupees difference in share capital is tallying with this 60,000. So shares were not issued against cash. Shares were not issued against cash and therefore it won't be reflected in the cash flow statement. Note right down here below this journal entry, as shares were issued as shares were issued without consideration being received in cash, without consideration being received in cash, it will not be it will not be shown in cash flow statement. It will not be shown in cash flow statement. It will not be shown in cash flow statement. It will not be shown in cash flow statement. So come back to your question, asset side now. After writing this note, come to asset side. Asset side, you have first item cash at the beginning. So I will write in point number E, cash and cash equivalent at the beginning of the year 2500. Point number F, cash and cash equivalent at the end of the period is 2700. Next line, sundry debtor, sundry advance and inventory. Sundry debtor, sundry advance and sundry and stock. So first you come to debtors. There seems to be some decrease in debtor. Main page, operating activity point 4, decrease in debtors. Please reply. Amount. Decrease in debtor is how much? 12,550. Very good. Now my question is, decrease in debtor, decrease in cash flow or increase in cash flow? Decrease in debtor is decrease in cash flow or increase in cash flow? Kindly reply. So you will say decrease in current asset is increase in cash flow. You are right. So positive number. In the same place, there is a sundry advance also. So sundry advance, write down decrease in sundry advances. Decrease in 2315 minus 735. Minus 735. So how much is that? 1580. 1580. Again tell me, decrease in sundry advance is increase in cash flow. Moonrise is right. Thanga Lakshmi is right. Next line, stock, but stock has an adjustment. I will come to working note 3. Please come to working note 3 on the screen left side. On the screen left side, change in stock. Because there is an adjustment here. So I will write like this, opening stock as per balance sheet. Opening stock as per balance sheet. This is given to us 111040. Add stock acquired from another company. Stock acquired from another company. You will see this figure here, 21640. Draw one line, take the total. 132 680, 132 680, and then you write down closing stock, closing stock as per balance sheet. So whenever there is an adjustment in current asset or current liability item, you will make a working note, then solve, otherwise it will not tally. So some stock were acquired from another company that I need to adjust. Closing stock in the question is 97,370. 97,370. Now you will write decrease in stock. Decrease in stock. So that is 132 680 minus 97 370. So this is 3535310. This is 35310. 35310. Please check. Decrease in stock. Decrease in stock. Decrease in stock 35310. We will transfer to working capital changes. Decrease in stock, in bracket write working note 3, 35310. Now my question is, decrease in stock, positive or negative? Cash flow effect is positive or negative? Decrease in stock, increase in cash flow. Decrease in stock, increase in cash flow. Okay. So this is right. Chetan is right. Come on, next line. Next line in your question is land and building. Now you see on your screen, asset side, you have land and building. Opening is more, closing is less. There is no other adjustment in the problem. There is no other adjustment in the problem. So my question is, what will you call this difference? What will you call this difference? In the exam, opening is more, closing is less. So there is a decrease in land and building. So there are two possible answers. Some of you can say sale and some of you can say depreciation. What do you think? We will call it depreciation because the difference is very small and it is possible they may have provided depreciation. Okay. If there would have been sale, they would have mentioned it. Okay, so we will assume depreciation because the difference is very small. So Thanga Lakshmi Surya also has the same opinion. So please come to adjustments. In adjustment, write down depreciation on land and building, or just write building. Write the difference 148 500 minus 144 250, and how much is that? So you are saying 4250. Very good. 4250. Okay, so land and building is over. Come to working note number 2, plant and machinery account. Plant and machinery account, to balance brought down. Everybody should start replying. To balance brought down 112950. Credit side buy balance carried down. Buy balance carried down 116200. And in working note 4, on the screen right side, machinery was acquired by issue of shares. So on the debit side, I will write down to equity share capital 18360, working note 4. 18360, working note 4. Is it right? Come back to your balance sheet. In balance sheet, next item is goodwill 20,000. From 0 to 20,000 means goodwill purchased. But on the screen right side, goodwill was purchased by issue of share. No cash flow is involved. I have written a note also. Since no cash flow is involved, it will not be reflected in cash flow statement. Okay. Next line, adjustment number 1. Adjustment number 1 is during the year ended 31st March 2011, interim dividend of 26,000 and tax at the rate of 10% was paid. This is similar to adjustment done in question number 9. I will first go to P&L account, add back. Add back interim dividend because it was debited to P&L account. Interim dividend is debited to P&L account, credited to interim dividend payable account, interim dividend payable to bank. So I will write 26,000 here positive. Again write down add back tax on adjustment, tax on interim dividend 10% of 26,000, 2,600, 2,600. And the second effect is payment of dividend in financing activity. Interim dividend paid in bracket 26,000, in bracket 26,000, tax on interim dividend paid in bracket 2600, in bracket 2600. Any query till now? Now come to adjustment number 2 on the screen. The assets of another company were purchased for 60,000 payable in full. Asset consists of stock, machinery, goodwill. Up to this done. This is pending. In addition, sundry purchase of plants were made totaling 5650. So the entry for this is plant account debit to bank. Plant account debit side, working note 2 to bank, and the amount is 5650. This is purchase, bracket purchase, 5650. In cash flow from investing activity, purchase of plant 5650, 5650. Then I'll come back to this plant and machinery account. Dear learned students, please tell me what is the balancing figure in plant account. Buy something, there is a difference on the credit side. How much is the difference and what will you call it? How much is the difference and what will you call it? Take debit side total first. Debit side total is, check the total, 136,960 minus 116,200. So your balancing figure is 20,20760. Tanya is right. Now what should I write here? Should I write sale or should I write depreciation? Again, the same problem. The difference can be either sale or depreciation. So we will assume depreciation, like we have assumed in case of building. At least some depreciation they will charge. It is a company form of organization. It is their duty to charge depreciation on depreciable asset. So this difference we will assume as depreciation 20,760. So you will add back in adjustment. Add back in adjustment depreciation on plant. Working note 2. Working note 2. 20760. 20760. Surya is right. Okay. So this is almost done. One last line. Income tax paid during the year amounted to rupees 25,000. Working note 1. Entry. Provision for taxation account debit to bank account. To bank account 25,000. And by P&L account balancing figure, take total of the debit side 75,000 minus 40 is 35,000. So what I'll do, I will write down payment made in income tax paid, and 35,000 is current year provision. Current year provision we will add back. In adjustment add back. In adjustment add back provision for taxation working note 1. Provision for taxation working note 1 add back 35,000, and in tax paid point number 6 below, in bracket in first column 25,000. 25,000. Tax paid bracket 25,000. Now just for quickly check whether working note 1, 2, 3, 4 they are completed. Yes. So if it is completed, then why are you waiting? First you tell me total at this point, operating profit before working capital changes. Operating profit before working capital changes. Take the total of these 6 or 7 items. Take the total of these items. Anybody wants to reply? Operating profit before working capital changes. So what is the total of all these points up to this point? Anybody? What is the total? Come on, come on. 90,140. Then you add from 90,140 till you add 35,310. You will get cash generated from operation. You will get cash generated from operation. Cash generated from operation before tax paid. Cash generated. Sakshi is right. Jan is right. Come on. Cash generated from operation 118960 minus income tax paid 25,000. So anybody, what is cash flow from operating activity? Deduct this figure, 93,960. Check the answer, 93,960. 93,960. Correct. 93,960 is right. Purchase of plant, there is only one item. So transfer to outer column, 5650. Then financing activity, take the total. Take the total of financing activity. All are negative. Check the answer, 88,110 negative. 88,110 negative. Surya is right. Now tell me point number D. Net increase or decrease in cash and cash equivalent. So net increase 200. Positive. Very good, Surya. Total of the 200 plus 2500 is 2700. Jan is also right. Why other students are sleeping? So is it telling? Is it telling? Say yes or no. Yes, it is telling. Most of you are able to tally. I am happy. Any query on this? Anybody? Any query on this? Come on. No query. No query. So please write down one note. First note, write down bank overdraft is assumed to be not part of is not integral part of, write down, bank overdraft is, one second, is assumed to be not integral part of cash management. Hence, considered as financing activity. Hence, considered as financing activity. Note number 2. One note we have already written on equity share capital. Difference in fixed assets are assumed to be depreciation. Difference in fixed assets are assumed to be depreciation. Difference in fixed assets are assumed to be depreciation. And one note on share capital we have already written. So now this answer is over. Just check you have understood everything. Any query on question number 9, 10, 11? 9, 10, 11. These are exam type questions which you might get in your exam. So, no query from the student side. Question number 12. As we will go ahead, the questions will become slightly difficult also. But don't worry, I am there. So, question number 12. Everybody, please come to question number 12. Question should be in front of you. Again, a little different problem. You have been given the following financial statement of AS Foundation Limited. Oh, and then there are two columns, 2011, 2010. This is current, this is previous. So while calculating the change, you have to calculate from right to left. Right to left. Be careful, otherwise, you will lose marks. Let us read the liability side first. Liability side, share creditor, provision for taxation, secured loan from bank, reserve and surplus, share capital, ordinary share of rupees 100 each. Cash at bank, debtors, stock in trade, fixed asset at cost less depreciation. So this is WDV. Investment, prepaid expense. Any query on the balance sheet? No query. Following further information is available from the records. Following further information is available. Questions will come in different ways. You can see every question is coming in a different way. So now this time what they have done on the screen, pay attention. This reserve and surplus means P&L account. Opening was 1,48,000. Closing is 3,12,000. So they have given you in your first adjustment the position in respect of reserve. You will see this figure is matching with your opening balance sheet. You will see this figure is matching with your closing balance sheet. But what is important for us, profit for the year. This I will write in net profit in operating activity, and dividend, this dividend paid, I will write in financing activity. So I will take two figures from here. Profit will go to operating activity, dividend paid will go to financing activity. Then you can ask me the question, how do you know the dividend has been paid? It may be provided also. It may be just a proposed dividend also. So I am saying dividend is paid because in the balance sheet, liability side, there is no proposed dividend. There is no dividend payable. So if there is no proposed dividend or dividend payable on the liability side of the balance sheet, it indicates what it indicates. It has been paid. Okay. So dividend has been paid. That you have to interpret. Next line, adjustment number 2. On 31st March 11, the accumulated depreciation on fixed asset was 1,80,000, and on 31st March 2010, 1,60,000. So this they are talking about something called accumulated depreciation. Accumulated depreciation means total depreciation from the beginning. Beginning the asset was purchased. till end of the year. That is called accumulated depreciation. Next line, let us see why it is given. Machinery costing rupees 20,000. Machine whose cost is 20,000, which was one half depreciated, cost is 20,000, and the depreciation already charged on this machine is half, which means its WDV is 10K, was discarded and written off in 2010-11, was discarded and written off in 2010-11. So what I'll do, I will transfer this to P&L account. Machinery discarded and written off. This we had done in question number 10 also. So unnecessary, so much information they have given, and the only benefit of this is I need to transfer 10,000 rupees from machinery to P&L account because it is discarded and written off. And this year 2010-11, depreciation amounted to rupees 30,000. So this also I will add back in P&L account. Is it right? So what is the benefit of these two entries? P&L account debit 10,000 to machinery 10,000, depreciation account debit 30,000 to machinery account 30,000. These two entries good student will write. And after that also, if the machinery account does not tally, it will be either purchase or sale. Okay. So after preparing machinery account, we will get to know what information is not required actually. This accumulated depreciation is not really required. Okay, because the question has given us the value of fixed asset in WDV form directly, so there is no problem. Point number 2, any query on this? Point number 3, investment costing rupees 5,000 was sold during the year for 4,200. So loss on sale 5,000 minus 4800 200. This is one entry. And government security of the face value 4,000 were purchased during the year for 3,750. So investment account debit 3,750 to bank 3,750. So two entries we have to pass here, one for sale, one for purchase in investment. So please tick mark investment account. In question number 12, asset side, tick mark fixed asset account also. Tick mark fixed asset account also. Okay. Very easy question. I should have given this as homework. But you are a good student, so we'll take in classroom. Interest on the loan during their amounted to 4,750. This is similar to question number 10 adjustment. You add in operating activity and you deduct this in financing activity. Add in operating, deduct in financing. Question is, you, who, you are required to prepare cash flow statement. You, okay, this is the student. You are required to prepare cash flow statement. So start. How is the drawing of a student? Name of the company, write down AS Foundation Limited. One more time, AS Foundation Limited. At the cost of irritating you, we are still giving you the same name. Cash flow statement, cash flow statement for the year ended, for the year ended 31st March 2011. Cash flow statement for the year ended 31st March 2011. For the year ended 31st March 2011. Draw this format. In adjustments, keep 10 lines blank. In working capital changes, keep 7 lines blank. Start little fast. Cash flow from operating activities. Cash flow from operating activities. Under that one, net profit before adjustment. Write fast. Net profit before adjustment. Net profit before adjustment. Point number two, adjustment. This is also indirect method because you cannot solve it under direct method. So you have to solve it under indirect method. Point number three, operating profit before working capital changes. Operating profit before working capital changes. Operating profit before working capital changes. Point number four, working capital changes. Point number four, working capital changes. Point number five. Point number five. Cash generated from operation. Cash generated from operation. Point number six, income tax paid. Income tax paid. Income tax paid. Income tax paid. Point number seven, net cash flow from operating activity. Net cash flow from operating activity. Net cash flow from operating activities. Then write down point number B. Point number B, write down cash flow from investing activities. Cash flow from investing activities. Keep 5 lines blank here. Cash flow from financing activities. Keep 6 lines blank here. Point number D. Point number D. Point number D. Net increase or decrease in cash and cash equivalent. Point number E, cash and cash equivalent at the beginning of the year. Point number F, cash and cash equivalent at the end of the year. Cash and cash equivalent at the end of the year. Cash and cash equivalent at the end of the year. So this is your main format. This is your main format, followed by working notes. Followed by some working notes. Okay. So this is a very easy question. Question format is over. We will write two working notes. Working note 1, fixed asset account, about 7 or 8 lines, and working note 2, investment account, about 6 lines, investment account. Investment account to find out whether it is telling or not. Fixed asset account to check whether there is any purchase or sale or not. 2 working notes will be sufficient, and some notes I will dictate. Okay, please start now. Question number 12 I am starting. You have been given the following financial statement of AS Foundation Limited. Sundry creditor. Sundry creditor will come in operating activity. Point number 4, working capital changes. Under the heading working capital changes, you will write increase in creditors. Increase in creditor, take the difference between 2,98,000 minus 251,450. So this should be 46,550. Increase in creditor, increase in cash flow. Increase in creditor, increase in cash flow. Is it right? Then there is a provision for taxation. Oh my God. Provision for taxation. You look at this question on the screen. Provision for taxation is given. But they have not given in the earlier 3 questions, 9, 10, 11. They had given how much income tax has been paid. In this question, they have not given how much income tax has been paid. So there are 2 ways we can do it. One, we can assume that last year provision for income tax 65,000 has been paid, and this year provision has been made for the current year. Last year paid, this year fresh provision made. Or we can assume the difference between 1,72,000 and 65,000. How much is that? 1,72,000 minus 65. This we can assume tax was not paid, only fresh provision of 1,07,000 is made. Which is more appropriate? Last year paid, this year provision made. This is option 1. Please reply. Or we should only pass entry for the incremental amount of provision made. We should just say this year no tax was paid, only additional provision of 1,07,000 was made. So kindly voice your opinion. This is a democratic country. You are allowed to give your opinion. One opinion is we should only pass entry for 1,07,000. 1,07,000. Okay. Wait. I will draw one diagram first. This person, Modi, okay, he will come to your home and take tax from you. How you can live a life without paying tax? Okay. So one person, Mr. Chetan, is saying that first model is good. I agree with Chetan because this fellow will come take tax from you. You can live without air but not without paying tax. Okay, so we'll pay the last year tax which is due and make total provision this year. So please come to tax paid format. Where is tax paid in our format? Point number 6. Point number 6, tax paid. You can assume otherwise also, but we will assume tax was paid. Last year tax paid 65,000 in bracket, and in adjustment add back provision for taxation. Add back provision for taxation 1,72,000. Add back provision for taxation 1,72,000. Next line in the question is secured loan from bank. 87,000 became zero. 87,000 became zero. Financing activity. Secured loan repaid 87,000 in bracket. Reserve and surplus. For reserve and surplus, come to this adjustment number 1 on the screen one more time. Opening is this figure, it is appearing in opening balance sheet. Closing is this figure appearing in closing balance sheet. What we need to write is these two figures, profit for the year and dividend paid. So profit for the year, you will write in first line net profit before adjustment. Net profit before adjustment 2,02,500. In your book adjustment number 1, and dividend paid in financing activity, dividend paid financing activity outflow 38,500. Share capital, right, issue of share capital 230 minus 197, 33,000 positive, 33,000 positive. Okay, come on, next. Asset side, cash at bank, point number E. Cash at the beginning 1,30,000. Point number F, cash at the end 45,000. Again come to working capital adjustment. In working capital adjustment, right, next line, increase in debtors. Question is in front of you, right? 1,40,000 minus 90,700 minus 90,700. So that should be That should be 49,300. Increase in debtor, decrease in cash flow. Increase in debtor, decrease in cash flow. And one more line right here. Increase in stock. Take on your calculator. 1,96,000 minus 1,42,500 minus 1,42,500. So that should be 53,500. Increase in stock, decrease in cash flow. Increase in stock, decrease in cash flow. Next, working note 1, fixed asset. Fixed asset account, to balance brought down 3,60,000, by balance carried down 6 lakh. This is net amount. Net means cost minus accumulated depreciation. Net means cost minus accumulated depreciation. And then we have to go to working note to investment account, to balance brought down, 11,250, and by balance carried down 10,000. We'll come back to this. Prepaid expense, again come to working capital adjustment operating activity point 4. Look at the prepaid expense. One more time increase. Increase in prepaid expense 7,000. Increase in current asset, decrease in cash flow. Increase in current asset, decrease in cash flow. That was balance sheet asset side. Adjustment number 1 we have done. Adjustment number 2, come to working note number 1. On 31st March 11, the accumulated depreciation on fixed asset was 1,80,000, but I have written net figure, so it does not matter. Then on 31st March it was 1,60,000, but I have written net figure, so it does not matter. Machine costing 10,000. Okay, now again let us discuss. Machine costing rupees 20,000, which was 50% depreciated, means the WDV of the machine which is sold is 10,000, was written off in 2010-11. So fixed asset account credit side, by P&L account 10,000, 20,000 minus 10,000, 20,000 minus 10,000. So we will say in adjustment we will write, operating activity adjustment add back machinery discarded and written off 10,000 positive. Working note 1. Working note 1. Next line, depreciation for the year. Depreciation for the year amounted to 30,000. Add back depreciation. Depreciation add back is 30,000. And depreciation we are going to write in fixed asset account, by depreciation 30,000. Now check whether this fixed asset account is tallying or not. So everybody will participate and tell me if there is a difference in fixed asset account, How much is that? And what will you call it? So we are getting difference on the debit side. To bank balancing figure, it seems there is some purchase of fixed asset. It seems there is some purchase of fixed asset. And first you take credit side total 6 lakh 40 minus 3 lakh 60. So that is 2 lakh 80,000 purchase. Tanya is right. So we will write down purchase of fixed assets. Purchase of fixed asset in investing activity. Chaurasia is right. Working note 1 in bracket write down 2 lakh 80,000. In bracket 2 lakh 80,000. Adjustment number 3 now. Investment costing rupees 5,000 were sold during the year for 4,800. So come to investment account, working note 2, buy bank, sale value 4800, buy loss on sale 5,000 minus 4800, 200. And government security of the face value of 4,000 were purchased for 3750. There is one more entry, we'll do it right now only. To bank, purchase, we will write the cost value, not the face value, because the actual amount paid is the cost value 3750. Now please check whether investment account is telling or not. So investment account on the debit side is 15,000. Oh, credit side is also 15,000. So it is tallying. It is tallying. Purchase and sale. We will write in investing activity, and loss on sale we will add back in operating activities. Do you agree? Say yes, we agree. So please come to investing activity. Right here, sale of investment. Sale of investment 4800. Purchase of investment 3750. 3750. And one more effect in adjustment, add back, add back loss on sale of investment, add back loss on sale of investment 200. Add back loss on sale of investment 200. Last adjustment, interest on the loan from bank during the year amounted to 4750. So this is just shifting from operating activity to financing activity. Again write add back interest on loan, add here 4750, interest on loan add in operating activity and deduct in financing activity less interest on loan paid 4750 less interest on loan paid 4750. Now we'll just check whether all working notes are closed. This is closed. This is closed. So we are ready to close this answer. My dear students, first calculate operating profit before working capital changes. Please take the total of these six numbers. Come on, tell me the total of this six item that will give me operating profit before working capital changes. Operating profit before working capital changes. Student will reply fast. Operating profit before working capital changes. Yes, write fast. So that comes to, how much is that? 4,19,450. 4,19,450. And now what you do? Now you tell me the total of these five items which will give me cash generated from operation. Cash generated from operation. Come on. Cash generated from operation. Cash generated from operation. Chetan is right. Now come on. Cash generated from operation. 356,200 minus 65,000. So therefore net cash flow from operating activity, net cash flow from operating activity is 2,91,200. 291,200. Chaurasia is right. 291,200. Check the answer now. 291,200 is right. Come to investing activity. Only three items are there. So tell me the answer now. 290, how much? 278, 950. Negative. Tanya is right. Now tell me financing activity. Tell me financing activity. Financing activity 97 to 50 negative. Net increase. Net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. 85,000. Negative. Tick mark decrease here. And therefore now if you try to tally, it will tally 45,000. Is it tallying 85 plus minus 85 and plus 130? This is tallying. Wonderful. You are able to solve it. Okay. So this answer is over. It is tallying now. This answer is over. Write down note. This answer is tallying. Notes write down. It is assumed that it is assumed that last year provision for tax has been fully paid. Last year provision for tax has been fully paid in the current year. In the current year, this year, a fresh provision for taxation of rupees 1,72,000 was made. This year, a fresh provision for taxation of rupees 1,72,000 was made. Any query now? Dear student, do you have any query? Come on, quickly. If you have no query, we'll go to next question. This time question number 14 first. Question number 14 first. What about 13? 13 will take after some time or maybe tomorrow. 14 is a small question. So first I will complete this smaller question. So all of you please come to question number 14. This is an exam question. All are exam question only. Question number 14 quickly. The balance sheet of Astha for the year ended 31st March 14, Astha and 2015 are as follows. So students are saying no query, you can go ahead. 31st March 14, 31st March 15. So this is previous and this is current. Very important to check. So read from left to right. Share capital you have to read like this. So share capital was 12 lakh. It is now 16 lakh. Equity share capital issued 4 lakh. Preference share was 4 lakh. Now it is 280. So preference share redeemed 1,20,000. Then there is a capital reserve opening is 0, but closing is there. So something must have happened. We need to examine what has happened. General reserve from 680 it has become 8 lakh. So transfer to general reserve. Transfer to general reserve seems to be 1,20,000. P&L account current year addition. Current year P&L account addition 60,000 after all adjustment. Debenture it was 4 lakh. Now it is 280. So there is a redemption of 1,20,000. Current liabilities, proposed dividend, provision for tax, and there is an unpaid dividend also. Oh my God. So this is the proposed dividend of the last year. Out of that, 16,000 is unpaid. So this time we will have to be very careful. Out of opening proposed dividend, 16,000 is unpaid. Remaining amount is paid. Remaining amount is paid and current year fresh provision will be made. Next, asset side, fixed asset less depreciation net amount. This is your WDV. Investment cash other current asset and preliminary expense, it was 80, now it is 40. So they have written off 40,000 in P&L account. So that adjustment we have to make. Next line, additional information. Listen to me very carefully because this question is tricky and they have asked in the exam this question or similar to this question. So what is this question? It says the company sold one fixed asset for rupees 1 lakh, cost of which was 2 lakh and depreciation was 80,000, means WDV was 1,20,000, sold for 1 lakh. So what is the loss? So indirectly they are telling you the asset was sold for a loss of, fill in the blanks. What was the loss on the sale of the asset? Dear student, what was the loss on the sale of this asset? Any answer? Loss on the sale of the asset. $20,000 loss. One student finally replied, I thought you have gone in sleep mode. The company also decided to write off another fixed asset costing rupees 50,000. Depreciation was 40, has been provided. So what is the WDV of this asset which is to be written off? 56 minus 40, asset of 16,000 will be fully written off, in the profit and loss account. Like the previous question, will be fully written off in profit and loss account. Next line, depreciation on fixed asset to be provided is 3,60,000. That is easy. Company sold investment at profit of 40,000, underline, which was credited to capital reserve. Please underline, otherwise you will ask me a query why we have not taken in P&L account. When the question setter is saying it was taken to capital reserve, who am I to tell you that it is taken to P&L account? Question is saying it is taken to capital reserve. So the journal entry for this would be, please write down nearby investment account debit to capital reserve 40,000, 40,000. Investment to capital reserve 40K, 40K. Debenture and preference share capital are redeemed at 5% premium. Debenture and preference share are redeemed at 5% premium. This is similar to one question number 10 we have solved. The entry would be debenture account debit, P&L account debit to bank account for debenture, and for preference share also, preference share account debit, P&L account debit for the premium paid and to bank account. Same adjustment we have done in question number 10. Student has to be continuously attentive to understand this very important chapter where you can score 16 marks, 1-6 up to 16 mark. This is a new adjustment now. What is new about it? Company decided to value stock at cost. Company decided to value stock at cost, whereas previously the practice was to value the stock at cost less 90%. Previously the practice was to value the stock at 90% of the cost. The stock according to the books on 31st March 14 was 2,16,000. So what is the cost of this stock? 2,16,000 by 90%. It means the stock was actually 2,40,000, but they have shown as 2,16,000. So under reporting of stock by 24,000. Now we'll have to rectify that. It's a mistake. Rectification entry will be stock debit 24,000 to P&L account, because if your stock is wrongly valued, last year profit was also underreported. So I will have to rectify that. I will have to rectify that. Then we can proceed further. The stock on 31st March 15 was correctly valued at 3 lakh. So closing stock has no problem, but opening stock has a problem. So my dear student, my question is, where is the stock in the balance sheet? Search for stock in the balance sheet. They have given adjustment for stock, and stock is not there in the balance sheet directly, but indirectly the stock is there under other current asset. Under other current asset, so tick mark other current asset, and it has the stock related adjustment. It includes stock. Other items can't include stock, but this includes stock. Okay, so this is a new adjustment, and we'll have to rectify the opening figure of other current asset. We will have to rectify the opening figure of other current asset, and we'll have to also make adjustment. Okay, prepare cash flow statement by indirect method. Underline, when the institute is telling you indirect method, follow indirect method. Okay, in any case this question cannot be solved under direct method, because you can't calculate collection from debtor, you can't calculate payment to creditor, etc. So Chetan was right. Stock is included in other current asset. So first you write down cash flow statement of Astha Limited. Cash flow statement of Astha Limited. Cash flow statement of Astha Limited for the year ended 31st March 2015. For the year ended 31st March 2015. Write down the format. Right hand side two columns. Quickly write down. Point A, cash flow from operating activities. Cash flow from operating activities. This question is very, very important. Many times in the past they have asked. Very, very important. Point number 1, net profit before adjustment. Point number 1, net profit before adjustment. Point number 2, adjustments. Point number 2, adjustments. Keep around 14 lines blank here. Keep around 14 lines blank. Point number 3, write operating profit before working capital changes. We are solving question number 14. Very important. Point number 4, write down working capital changes. Keep 5 lines blank here. Point number 5. Point number 5. Cash generated from operations. Point number 5. Cash generated from operations. One line blank. Point number 6. Income tax paid. One line blank. Point number 7. Cash flow from operating activities. Cash flow from operating activities. Cash flow from operating activities. After that, you write down point number B. Cash flow from investing activities. Cash flow from investing activities. 6 lines blank. Cash flow from financing activities. 6 lines blank. Cash flow from financing activities. 6 lines blank. Point D. Net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. Point number E. Point number E. Cash and cash equivalent. Cash and cash equivalent at the beginning of the period. Point number F. Cash and cash equivalent at the end of the period. Cash and cash equivalent at the end of the period. Is the format ready? Is the format ready now? Can we start? Can we start? Is the format ready? So we'll prepare some working notes. Write down working notes. Working note 1, write down capital reserve account. Capital reserve account. About 6 lines. Working note 1, capital reserve account. Working note 2, write down fixed assets account. Fixed asset account, about 6 or 8 lines. 8 line write down because we have more adjustment here. Working note 3, write down investment account. Investment account. 6 lines. Investment account. Working note 4, write down adjustment of opening stock. Working note 4, write down, which is a statement format. Adjustment of opening stock. adjustment of opening stock, adjustment of opening stock. So I'll come back to these working notes later. Let us start this question. Let us start this question now, line by line. Equity share capital. Equity share capital is easy. We will write in financing activity. What we will write in financing activity? Issue of equity shares. Issue of equity shares. Positive figure 4 lakh. Positive figure 4 lakh. Then we have preference share. From 4 lakh it has become 2 lakh 80,000. And there is an adjustment number E. Preference shares were redeemed at 5% premium. So understand what journal entry they must have passed. Journal entry for redemption of preference share. Journal entry for redemption of preference shares. Preference share capital account debit. Difference between closing and opening balance. 1,20,000. P&L account debit. 5% of 1,20,000. 6,000. To bank. 1,26,000. And same journal entry for redemption of debenture also. So a good student will note down somewhere, because when he will revise, he will not have any confusion. For debenture also, the amounts are same. So debenture account debit 1,20,000. Premium we will assume is debited to P&L account and to bank 1,26,000. So interested candidates can note down it fast. Later on, you don't have any problem. When you are revising a day before the exam, then you will understand that this company had passed. We are not passing any entry. All entries have been passed. We are only evaluating it. So what I will do, understand this 120 is already reduced in the balance sheet. This 6,000 we will add back in operating activity, and this 1,26,000 we are going to pay in financing activities. Okay, so let us come to adjustments in operating activity. Right here, add back, add back premium on redemption of preference share. Why add back? Because it is a financing activity. Premium payment on redemption of preference share is a financing activity, but they have debited P&L account. We are assuming they have debited P&L account. You can assume that they have debited capital reserve, sorry, general reserve. But if you assume it is debited to general reserve, you will have to open one general reserve working note. So it will increase one more working note. Answer will not be affected. Do not worry. What is your next item on the liability side? Wait, we have to pass payment also. Financing activity. Point number C, financing activity, redemption of preference shares, including premium, in bracket 1,26,000, including premium 1,26,000, including premium 1,26,000. Next item is capital reserve. Third item in the liability side, capital reserve. Just write on the debit side, closing balance to balance carried down. Opening balance is 0, so don't write. To balance carried down, 40,000. General reserve has increased from 6,80,000 to 8 lakh. So entry passed by the company was P&L account debit to general reserve. Add back. Add back, transfer to general reserve. Non-cash entry. This is non-cash entry. 1,20,000. You can check the difference. 8 lakh minus 6,80,000. P&L account. First point 1. Net profit before adjustment. 3 lakh minus 2,40,000. 60,000. Net profit before adjustment 60,000. 9% debenture. 9% debenture, same adjustment. Same adjustment. 5% premium paid, add back. In adjustment. Premium on redemption of debenture. Same adjustment 6,000 here. Premium on redemption because figures are also same. And in financing activity again same sentence. Redemption of debentures including premium. Very good question. Keep following me. 1,26,000. 1,26,000. 9% debenture redeemed with premium 1,26,000 in bracket. Now next item is current liability. Come to operating activity point 4 here, working capital changes. Working capital changes. So what has happened? Increase in current liability. Current liability has increased by 480 versus 520. So it has increased by 40,000. Increase in current liability, increase in cash flow. Increase in current liability, increase in cash flow. Next line. Balance sheet liability side, next line. Proposed dividend. Last year was 1,20,000. On the screen, I'll explain. Last year was 120. Unpaid is 16. So the payment made is difference between 120 and 16. And current year fresh new provision was made. So this you will add back and this net amount you will pay. Okay. So please come to financing activity. Dividend paid. So actual dividend paid will be 1,20,000 minus 16,000 in bracket 1,04,000. And the provision for dividend made, add in adjustment, add proposed dividend, add proposed dividend in bracket for the year ended 31st March 15. For the year ended 31st March 15, and this amount is 1,44,000 add back. 1,44,000 add back. After proposed dividend, liability side, provision for tax. Last year is 3,60,000 and this year is 3,40,000. Question is silent. So we will assume last year provision for tax was paid. This year fresh provision was made. So come to point number 6 below. On the screen, last second item, income tax paid in bracket 3,60,000 and current year provision for tax add back. Same note you will copy which I have dictated in one previous problem, that last year provision for tax was paid and this year fresh provision was made. Note already dictated to you. Unpaid dividend adjustment we have done. Unpaid dividend adjustment we have done. Any query on liability side? Asset side, fixed asset. But fixed assets have many adjustments. So you write down here to balance brought down net of depreciation 22,80,000 and buy balance carried down net of depreciation 26,40,000. 26,40,000. I will come back to this later. Now come to investment account. To balance brought down. Working note 3. To balance brought down 4 lakh. Yes or no? And buy balance carried down. Just write it. We will come back to this ledger later. Buy balance carried down 3,20,000. Cash balance at the beginning, point number E, cash balance at the beginning is 10,000 and cash balance at the end is also 10,000. Wow! Which means you know the answer. Net increase or decrease will be 0. But we have to prove it. Don't write in the exam 0 on your own without solving. Some smart students will do that. That is wrong. Institute will deduct marks. Come to adjustment number A. Before that, there are two more items. Other current asset, 11,10,000 and 13,10,000. Wait, this has an adjustment. Adjustment number F. Please come to adjustment number F. Company decided to value the stock at cost, whereas previously the practice was to value stock at cost less 10%. The stock according to books on 31st March 14 was 2,16,000. This requires adjustment. The closing stock was correctly valued. So no problem with closing stock. Come to working note 4. On the screen, working note 4. Adjustment of opening stock. Write down increase in opening stock value. Increase in opening stock value equal to 2,16,000 divide by 90% into 10%. 2,16,000 divided by 90% into 10% is 24,000. 24,000. So opening stock will increase by 24,000. This company have done the rectification. What is the journal entry passed? Journal entry passed by this company would be opening stock account debit 24,000 to P&L account 24,000, being opening stock correctly valued. Being opening stock correctly valued. Being opening stock correctly valued. First you do this much. Now this opening stock is reflected in other current asset. So below this write down one working note 5, change in other current assets. Change in other current assets. Change in other current asset. Right hand side rupees. Right hand side rupees. So first you write down A, opening balance. Opening balance of other current asset is 11 lakh 10,000. Opening balance of other current asset is 11 lakh 10,000. But there is a problem. It is not correct. You have to add increase in opening stock value 24,000. So now this has become 11 lakh 34,000. 11 lakh 34,000. Point number C, closing balance as per balance sheet, which is given to you as 13 lakh 10,000. 13 lakh 10,000. So you will write therefore increase in other current assets. Increase in other current asset is 1 lakh 76,000. 1 lakh 76,000. Increase in other current asset 1 lakh 76,000. Very important question is going on. So now you see, you have to give two effect of this entry. One effect, you have added in this opening stock, already done, and they have credited the P&L account. They have credited the P&L account by 24,000, which is a non-cash adjustment. It is a non-cash entry which have gone into P&L account. It is a non-cash entry which have gone into P&L account. So what I have to do, I have to first go to adjustment, and in adjustment I have to write less. Less write down increase in opening stock value. Working note 4 in bracket 24,000. In bracket 24,000 because we have credited non-cash item. And next you come to point number 4 below, working capital changes. Increase in other current assets. Working note 5. Working note 5. 1,76,000 in bracket. Increase in current asset is decrease in cash flow. Increase in current asset, decrease in cash flow. So in bracket 1,76,000. So we have done the adjustment of stock. Point number F, tick mark, F is over. And one more item is in balance sheet, preliminary expenses. 80,000 opening, closing is 40. 40,000 written off, add back on the screen. Add preliminary expenses written off. In first column, 40,000. So this completes my balance sheet. Point number A, the company sold one fixed asset. Company sold one fixed asset for 1 lakh. This is sale value. Cost was 120. Depreciation provided was 80. So the WDV was 1 lakh 20,000 and sold for 1 lakh. So loss will be 20,000. So I have to now reflect it in my answer. So we'll come to fixed asset account. Working note 2. Fixed asset account working note 2. You will write buy bank sale value 1 lakh. Buy bank sale value 1 lakh. And then you will write by loss on sale of asset. By loss on sale of asset, first you open a big bracket. Under that you write down 2 lakh minus 80,000, that was WDV, and minus 1 lakh, that is sale value. So you will get 20,000 here. 20,000 here. So this is my adjustment number A. Bank 1 lakh sale value, investing activity, sale of fixed asset 1 lakh. This is given in the question. And the loss which you have debited to P&L account, add back. Add back in adjustment. Add back in adjustment loss on sale of fixed asset 20,000. Working note 2. Loss on sale of fixed asset. Working note 2. Any query on this? Adjustment number B. Adjustment number B. Company has decided to write off another fixed asset. Cost 56,000, depreciation 40,000 has been provided. So its WDV is 16,000 and it is written off. Fixed asset account credit side by P&L account 16,000. 56,000 minus 40,000. 56 minus 40 16,000. And this you will again add back in adjustment. In adjustment, add back asset written off bracket working note 2 positive number 16,000. We are adding back 16,000. Ready for the next point? See, depreciation on fixed asset is 3,60,000. Depreciation will be added back. So once again adjustment on the screen, add depreciation 3,60,000. Add depreciation 3,60,000. Add depreciation 3,60,000. Fixed asset account credit side By depreciation, by depreciation 3,60,000. Now fixed asset related adjustments are over. Check on the debit side. There is a balancing figure to bank which is purchase. So student will take the total of the credit side first. Take the total of the credit side 1 lakh plus 20,000 plus 16,000. You can reply if you have got the answer 3,60,000 plus 26,40,000 and minus 22,80,000. So the purchase of fixed asset is, check the answer, 8,56,000. Anybody getting 8,56,000 will raise hand. 8,56,000. Purchase of fixed asset 8,56,000 in investing activity. Tanya is right. Purchase of fixed asset, working note 2, in bracket 8,56,000. 8,56,000. Chaurasia is also right. Okay, now we'll come to adjustment number D. Come to adjustment number D. It says company sold some investment at a profit of 40,000, which was credited to capital reserve. Which was credited to capital reserve. So the entry will be investment account debit to capital reserve. This will not go through P&L account. Specifically given, follow the instruction. 40,000 debit to investment, working note 1, capital reserve, credit side, by investment account 40,000. So now capital reserve is tallying. Investment account is not tallying. There is some sale which have happened. So the student will have to find out here by bank balancing figure, and that is the sale value 440 minus 320. So the value of the investment sold or sale value is 1,20,000. Check the answer. Is it right? Investment sold for rupees 1,20,000. So this is also tallied now. All working notes we have tallied. How it is sale? Oh my God. It is written in the question also. Company sold some investment at a profit of 40,000. So if you look at the figures, 4 lakh is here, 3,20,000 is here. Difference is 80 and plus 40. So total sale value is 1,20,000. Now we'll go to cash flow from investing activity, sale of investment. It is given in the question. Investment was sold. So that comes to positive number 1,20,000, and the source of the information is working note 3. Very good. Point number D we have done, E also we have done. Point number E is debenture and preference share redeemed, done. Point F, stock, done. Oh, all adjustments are over. All working notes are also tallying. Then why are you waiting? You should go to cash flow from operating activity. take your calculator, add from 60,000 till 3,60,000, add, you will get what is called operating profit before working capital changes. So please take your calculator and reply operating profit before working capital changes. Let us see who will give the total first. On the screen, all figures are appearing. Come on. Anybody? Total of point number A, 1, 2. Please take the total and reply. 10,88,000. Right, 10,88,000 plus 40,000 minus 1,76,000 will give you cash generated from operation. Cash generated from operation will be 9,52,000. Correct, Mehta. Mehta is right. And minus 3,60,000 will give you 5,92,000, which is cash flow from operating activity. Which is cash flow from operating activity, 5,92,000. 5,92,000. Is it right? Then come to investing activity. Tell me the answer. Investing activity. So that is negative 6,36,000. Very easy to calculate. Chetan is right. Come on. Come on, Mehta. Come on, Chaurasia. Cash flow from financing activity. Cash flow from financing activity. So this should be 44,000. 44,000. Bansode is right. Mehta is right. And finally, tell me the total. It should come to 0. It should come to 0. Is the total matching with 0? Yes. Everybody got it right. Everybody got it right. 44,000 is right. So just write down notes. Notes write down. First write down provision for tax. So this note you will copy from question number 12. Already dictated to you, so no point in repeating. Copy from question number 12. Second, in the absence of information about preference dividend and interest on debenture and interest on debenture, the same has been ignored. The same has been ignored. In the absence of information about preference dividend and interest on debenture, the same has been ignored. I have written a note here because we don't know the actual date of redemption. Okay, we don't have full information about preference share and debenture. Depending on the date of redemption, the interest or dividend will be calculated. Okay, no information about date of redemption. No information about date of redemption is available. Okay, accordingly, my answer will change. If I assume redemption at the beginning, interest and dividend calculation will change. If I assume redemption at the end, again my interest and dividend calculation will change. So, according to assumption, you can write if you want. Third, write down. Third point, write down premium on redemption has been charged to profit and loss account. Premium on redemption has been charged to profit and loss account. Premium on redemption we are assuming is charged to P&L account. Otherwise, if you assume general reserve, I have no problem, but you have to make a working note to find out the missing figure in general reserve. Point number 4, profit on sale of investment. Profit on sale of investment has been credited to capital reserve. Hence, not adjusted in profit and loss account. Hence, not adjusted in profit and loss account. Hence, not adjusted in profit and loss account. So, finally, this answer is over from my side. This is how you have to solve and present in the exam with the notes. If you write like this, you will get full marks. So, thank you very much. See you tomorrow. Bye bye. Have a good day. Enjoy your studies. Good luck.